Okay. So for today, we are going to go for test of controls, and for daily basis, we are going to be covering up a new area and every type of possible question that can come in the examination. Now, obviously, everyone when they're attempting the exam, they know what is there in the pacing. In the case, what is there and what do they have to cover. But the main problem comes in how they write it down. Many people are having this issue that they understand the concepts, they know the theoretical concepts, they know the concepts as a whole, but they are unable to draft the answers because they are not having a knowledge of the correct pattern. Now, is knowledge important? Absolutely it is. Is drafting technique important? It is absolutely essential for you to know the drafting techniques. Many people know how to write, but they are unable to convey their message. So we are trying to go for a very concise, precise workshop with you guys where we are going to basically have an understanding of how each type of question should be written, what areas to cover, what are the areas that are basically left out by common students as per the examiner as well, the marks distribution, and how important it is to basically draft the answer in the correct strategy. Many people do what they basically memorize test of controls, memorize substantive procedures, memorize auditors, risk and responses. But the problem is that exam is scenario based. And further on from this point onwards, the examiner is basically changing the techniques. He is going for more practical approaches. They are going for a most advanced version. So if you're going for an advanced version and you're memorizing stuff, obviously it will not help you in the longer run. In this exam as well, many people tend to fail because they fail to draft the answers correctly. So for this basic webinars, basic crash course, what we basically are trying to focus here is how to draft the answer accurately. Now, one thing that is important, how I'm going to be discussing the stuff up. First of all, I'm going to tell you the drafting techniques for each of the questions. Like here in test of controls, I have listed the type of questions that we have. After that, we're going to solve practical questions from the kit. So anyone having any questions, please drop them down in the chat box. And after I'm done with a particular area, like I'm done with the drafting part, I'm done with the first question or second question, I'm going to pause the recording and refer the chat box for your queries. So please don't be patient, be a little patient and drop your question in the chat box. I'll refer to them individually and guide you along with all the areas. So no need to worry about it. Okay. So let's begin. Now, first of all, there are 2 to 3 types of questions in test of controls. One is whether to identify direct control or have a deficiency. Now, one combination that we commonly see, the combination is direct controls and test of controls. Now, let's go about for the first area. Now, what is a direct control? A direct control is a control that is effectively designed and implemented and mitigating the risk it is meant to mitigate. Now, how do I draft or how do I tell other party that this control is a direct control and is basically mitigating the risk it is meant to mitigate? First of all, the examiner says if this question is of, let's say, 6 marks, 3 controls are to be mentioned here. Okay, out of 3 controls and 3 test of controls, obviously. Now, 3 controls are to be mentioned. In the first 3 controls, what do you have to mention? First of all, identification. Identification is the important part. What do we mean by identification? Pointing out from the passage, copy pasting the areas, copy pasting the point from which the particular deficiency or the direct control is coming up from. Now, why are you saying, what are you saying is a direct control is to be mentioned here? Plus, this is where commonly people stop. They identify a direct control and they stop. But the main part starts here where you have to explain how the direct control is mitigating the particular risk. How is the direct control mitigating the risk? Now, this is the part where you mainly get 1 mark and the impression on the particular examiner. Now, if you're telling other party that this is a direct control, let's say, for example, we take a CCTV camera. A CCTV camera is obviously directly mitigating the risk of theft, right? So if a CCTV camera is placed and it is directly mitigating the risk of having theft, now you identified a direct control that is CCTV camera. Now, how is it mitigating the risk? That is the part that you have to write that will gain you the main marks. understand one thing, the person checking your answer script is also a human. And if you're not leaving an impression on them, you're not going to give the particular absolute best of yourselves. The impression is to be built. Now, identification, explain how it is mitigating the risk. Okay. And when you're explaining how mitigation is being done, we have to basically explain as well that what it is mitigating. Let's say if the security camera is placed, it is direct control. Now the second part comes in, that the security camera enables us or protects us from the risk of having theft that could lose a potential income for our businesses. That could lose a potential income for our businesses. Okay. So the potential income lost is the effect of not having a control. So direct control is mitigating that risk. So tell the examiner that yes, we know that what kind of risk is it mitigating as well. Now the test of control. For a test of control, I I tell everyone a very simple technique. What is the technique? If a control is placed, why is there a control? The control is there so that it can mitigate a risk. So the objective is to mitigate the risk. Okay. The objective is to mitigate the risk. Now, if I'm drafting the answer, for test of controls, my test should be that is my objective being fulfilled or not. I have to check whether my objective is being fulfilled or not. If the objective is not being fulfilled, that means it is a weak control. It is a wrong control. It is a weak control that will basically not give me the particular outcome I want it to be bringing upon. Okay. Now, my main objective is to basically make sure the test here is basically to make sure that the risk that is being mitigated is being mitigated at the fullest level. I want to make sure the risk is being mitigated. So if you want to write an answer based on test of controls, first identify the objective of the control. If you know the objective of the objective of the control can be converted into testing the control. Now, if my security camera is there to mitigate the risk of theft, is it pointed in the direction of the particular merchandise that I've kept? Is the security camera being backed up with the footages and are the footages being reviewed? So this gives me the sense that yes, this camera is there. This control is placed and the control is effectively being utilized. The control is effectively being monitored in order to mitigate the risk. So both part goes along. Now, this is the first part of question. Now, the second type of questions that are coming in the examinations are either a combination of control deficiency and recommendation of control, or the combination of these three: deficiency, recommendation, and test of controls. All of three are coming in one question. Now, this is one of the easiest area where you can obtain marks. Why is this the easiest area? Because the marks are distributed very evenly and very equally. This gives you a wider room to basically work along with multiple areas. Now, if a 15-mark question is there, five, five for risk, five for recommendation, and five for controls. Now, here a problem comes in, that is time management. Because in these types of questions, you have to write slightly higher than normal, slightly more than normal. Like if you're writing a deficiency has three parts. What three parts are there? For a deficiency, first of all, number one, identify the deficiency. Number two, explain the deficiency. Explain how is it a deficiency. And third, you have to write the impact of the deficiency. Okay. Now, these three things are important. According to the marking scheme, identification and explanation are the only areas mentioned in the past papers. According to the examiner, he says identification and explanation are getting 0.5 marks each. But remember one thing, that explanation without an impact is incomplete explanation. Like if I tell you that the exam is going to be very difficult, Now, I'm explaining you that the exam is going to be very difficult. So what does it mean to you? Until unless I tell you the impact that the passing ratio will fall in this exam, then you will take it seriously. If the impact is not there, the explanation is incomplete in front of us. So remember that many people miss it out. Many people skip the part of impacts, so their explanation is incomplete. So the 0.5 seems to be very less, but when it accumulates up for all the parts, it will give you a passing or failing scenario. Now, coming up, first part, deficiency is explained. Now, number two. Number two is our recommendation. Now, I have to recommend a control. Let's take an example. You come to me. You come to me and ask me that you want a career advice. What should be the first thing I should know about you? What is the goal that you want to achieve? You come to me, you ask me whether should I go for ACCA, CFA, CIA, whatever. So my recommendation should be based on the goal you want to achieve. You say, I want to go into a private sector. I want to be an auditor. I want to be a financial analyst, whatever it is. My recommendation will be based on achieving your goals. So first of all, I need to know the goal of my control. That is mitigation of risk. My goal should be identified first. Now, this is the mind map that you have to develop in your mindset. You have to think about it. What is the goal that I want to achieve? Let's say, if a credit control activity, a credit controller is a clerk. A clerk is deciding the credit limits of its customers. Now, what is the problem here? The problem is if the clerk is basically deciding the credit limits, he might basically give us a position where the credit limit might be set too high or too low. If the credit limit is set too high or too low, whatever happens in this scenario, what will happen is that my particular customers might give me a bad debt, the higher chances of bad debt. And if the credit limit is set too low, that means basically I'm losing business. So my objective should be that I should set a credit limit that is accurate. That is accurate. Now, how do I do it? Now, the recommendation says, how do I do it? So first identify the goal, then give them a walkthrough of the process. Let's say if you're saying that you want to mitigate the risk of losing business or having a better, now what should we do? The goal is to have an accurate credit limit. So my senior manager should set a credit limit, and if there is any changes, it should be approved by the senior, and the senior should basically review the particular credit changes, credit limits simultaneously. So the walkthrough is there. The walkthrough is there that this should be the complete process. Now, if I want to basically perform the test of control, the test is whether my goal is being achieved or not. So if I am setting the credit limits and my senior is approving the credit limits and I'm saying that they will be updating the credit limits, what will be my test here? My test here will be that first of all, my credit limit should have a signature or a stamp or any kind of approval indication by the senior management. Number one. Number two, I will try to enter a sale demand higher than the credit limit and see what is the response. Is my query responded in a way that it is transferred to the senior manager and he accepts or rejects it? Or is it directly being rejected? Or is it being directly accepted or not? So I'm going to test the particular system so that when I can check basically that the goal that I'm trying to achieve is being achieved or not. So this is basically the walkthrough of how to draft these types of answers. Okay, so you have to make sure that you are following these steps to write a complete answer. Obviously, it will take time, it will take practice to basically bring it into the time constraints that we have. But if you write an answer in this format, this is advised by the examiner as well. And personally, I've experienced people writing these types of answer getting a higher chance of passing this exam. So please write this down and try to follow these steps. I'm going to apply these steps on the examination questions right now after the next 2 minutes. So if anyone has any questions regarding the pattern of writing the answers, please drop it down in the chat box. Okay, now the question from the Kaplan Kid, Delhi company. Now, how to attempt a question? First of all, read the requirements. The requirements are the first priority for you. Now, why are the requirements read first? Requirements are read first because you don't have enough time in the examination. Obviously, you're reading the complete passage, going back to the queries, the questions, the requirements, and then reading it again doesn't make sense. If you have the target in front of you that you have identify deficiencies, it will be easier for you to identify the particular answers along the way of reading the particular question. So scenario should be first left out. Read the queries, the questions, the particular parts, the requirements that you have. After that, go to the passage. It will help you in basically answer, answering or drafting the answer in a more quicker way. And what to do? As soon as like in this question, we have three requirements. First is identification of risk, control risk. Then we have the recommendations and the particular test of controls. So as soon as you identify a deficiency here, copy it and paste it in your answer script with the heading. This way, when you have finished the passage, you have at least something present in your answer sheet. From that point onwards, the recommendations, the controls, and the explanation are to be done by you. So once you're reading the passage, alongside reading the passage, write something on your answer sheet so that you are able to have the complete context of the particular question in your answer script and you don't waste any more time than just basically going back and copy pasting again. So let's read along and see the particular question. What does it say? The first paragraph is obviously just an introduction. Now let's start with payroll. What does payroll say? Payroll basically says a company has 210 employees in its factory who are paid on weekly basis by bank transfer. The factory have key cards and are required to swipe it out at the beginning and the end of the shift has ended. The process is supervised. Hours worked by an employee are recorded electronically by the supervisor in the key card systems, which is linked to the payroll system. Each week, the hours worked are automatically transferred to the payroll system. As the process is automated, no checks are performed. Now, the deficiencies highlighted in front of you. Don't have to deep dive into the case. Now, there is a deficiency, obviously, that there is no checks being performed on the particular data. If there are no checks performed, what is the risk here? That someone might click in our key card or swipe our key card for another employee and swipe it out late when they are going out. So obviously this creates a position where the employee might be getting an overpayment and they have a position where this risk is present significantly. So number one, identification of risk. Identification means copy pasting this complete passage, this complete area. Now, why is it a risk? It is a risk because there are no checks performed of the transfer of work hours. There is a potential opportunity for the employees where they can swipe in an employee's or a friend's or a family member's key card without being getting noticed, without being getting checked. As a result, there will be a chance of overpayment here. So, risk here is swiping in for someone else. There is an opportunity for us. And the particular area of what you can say impact will be overpayment of employees. Getting the point that once you are basically in a position that you have read the passage, you should simultaneously copy paste the area. Don't write the explanation first. If you're writing the explanation, it will take more time. Just copy paste the passage and think along what should be written here. Now, this is the particular risk that we have identified. Now, if I go along and discuss the recommendation from with you guys. Now, in terms of the recommendation, what should be my goal here? My goal here should be that I am paying the employee as much as they are working. For the hours they are working, I should not pay them over or under whatever the particular hours they are working. Now, how do I make sure that I'm paying an accurate hourly rate or I'm paying for the accurate hours in the particular year? Now, for accurate hours, what should I do here? I should basically keep a check here. I should appoint a senior official who should basically authorize the particular hours transferred to the payroll before they are being transferred. So without his approval, the particular hours should not be transferred. So I can write it here. Appoint seniors for approval of hours before transfer. Is it benefiting me in any way? Yes, it is basically helping me achieve the goal that I have. My goal is that the hours that are being worked by the employees are being basically paid for that only. They're not being overpaid or underpaid for the hours that are there. Okay. Now, how do I test this control? Now, is the goal in front of me that I want to pay an accurate amount to the employees? Obviously, the goal is in front of me. If the goal is in front of me, I need to do what? I need to basically make sure that I am fulfilling my goal by this particular recommendation that I've given. So if I'm saying there should be an authorization approval should be by a signature or a stamp. Yes, any evidence should be present there. So I will pick up a sample sheet of the weekly hours transferred to the employees, and I will check whether there is evidence of authorization or not before the transfer hours are finalized. So I review a sample of the weekly transferred hours from the payroll, from the HR department to the payroll department, and check whether they have initials of the senior allotted official or not. So this basically ensures me that I have authorized hours transferred to the particular employees. Now, obviously, recommendations can be of multiple types. The controls can be of multiple types. They can be multiple systems. We can have a CCTV camera placed and the person monitoring the CCTV camera to check whether the person who is checking in for their only one card there. We can have biometric systems installed. So multiple recommendations can be there. Multiple test of controls can be there. But I'm giving you a hint of what can be there in the most common scenarios. Okay, moving forward. Now, the payroll is run on a weekly basis and the system automatically calculates the wages to be paid on a sample basis. A payroll clerk checks gross to net pay calculation and compares these system generated balances, ensure accuracy of payroll system. Now, this is a good control. If any changes to the payroll data are required, the payroll clerk makes the amendments. An edit report of any amendment is produced weekly but is not reviewed. Now, now listen to me very carefully. A control is there. The control is placed. The control is present. But the problem here is the control that is present is not effectively being implemented here. The control is there, but it is not effectively implemented here. So if it is not implemented, that means basically it is a uselessness for us. It is a useless process for us, right? So if it is useless process for us, obviously we are in the position where we should not basically control or consider it that it will mitigate any kind of risk. So design is accurate, but the implementation is weak. So we are going to mention this out. First of all, copy the area that the edit report not reviewed. Now explanation, what should I explain here? How should I explain it? Now my explanation here will be that if the amendment reports or the changes report or the edit report is not reviewed, it is creating an opportunity for the particular employee. Opportunity for the employer to do what? To basically revise the payroll rates, inflate the data, deflate the data for some friend and family members. He can basically do anything he wants. Obviously, if he is editing something and we are not checking what he is editing, he can do anything at all. He can create ghost employees. He can inflate the rates of his friends and family members. He can deflate any competitors' rates, etc., or ours even. So this could result in now the impact. Impact is important. Impact is Impact is that this would result in a system where inaccurate payments would be made to the employees. There might be deductions from employees who actually have worked well. And at the end of the day, it will basically do what? It will basically impact the goodwill of the company systems. Consider this, that you're going to an organization and working. If you're going to an organization and working, and the payroll that the hours you have worked are misstated, the rates are up and down, obviously you're going to question the management that what are you doing here? What is your job here? Your job is to basically make sure that my records are accurate. So your job is not being done accurately. Will you lose faith in the company? Obviously, you will lose faith in the company. So that is why goodwill will be the impacted area, and misstated payroll obviously will be the impact of this particular deficiency being there. Now, if this is a deficiency that I have, what should be my goal here? What should be my goal here in terms of recommendation? My goal of my control should be that I should basically have the edit report or any changes report or any changes done in the system be reviewed, approved by the particular senior management. Now, obviously, when you're giving recommendation can be similar for previous ones as well. There is no issues subject to your referencing the particular passage you're practically applying. So my recommendation, my goal should be that my reports generated by the system or any changes should be authorized. So here in this scenario, I will say edit report to be reviewed by senior officials before publishing, before being published. So in this way, what will happen is that I will basically be having a surety that yes, these amendments, whatever changes are there, they should be made, and the results or any anomalies. Anomalies are basically unexpected events or one-off events. Any anomalies to be seeked justification upon. Now, why is this? Because if the report is being reviewed and anomalies are there, and we're not asking that why is there an anomaly here? Obviously, it is a waste of time. Why are you reviewing it when you don't have to take any justification from the other party? So the main idea here is that you're going to see justification from the other party that if there are any unseen, unforeseen, unprecedented things happening, why are they happening? What are the changes happening? And if you are satisfied with the changes, then you will sign the particular statement and move it forward. Now, the test of control obviously is going to be basically checking whether the control is being applied adequately, the implementation is correct. So I'm going to check that my edit report has an initial or a signature, any kind of authentication that it is basically reviewed by the senior official. And I will take a sample of amendments and I will investigate that what was the discussion done between the employee and my senior official. Like I've told you, if there is any anomaly, we will seek justifications. So I will confirm, I will take a sample and I will see that if there is an anomaly identified in front of the particular systems, is it investigated or is it confirmed with the employee and seek justification upon before it is approved, or it is approved only through just a simple conversation or just gone through. So I have to check for that as well. Now, moving forward to the next paragraph. We have so far identified two of the particular areas. We need only 5 out of the complete passage. Let's see. Now, the Delhi company has a head office with a warehouse included at each ware factory. The company has internal audit departments which carried out a comparison between all the assets recorded and non-current asset registered to those physical present in each 21 site. Now, remember that we have 21 sites here. The year's program of visit, which has been planned and carried out on the same basis as previous years, mean by the 30th September 2005, internal audit will only have completed this comparison at one factory and one warehouse. Now, this is a problem in front of us. Why? We have 21 outlets, we have 21 factories, we have 21 sites, and out of them, we are only checking 2 for the particular year. If you're only checking 2 out of 21, think that the rest of the 19 can have a significant of risk and fraud, significant risk of fraud, of theft, of misappropriation of assets. It is present there. So make sure that in this situation, the risk is widely, openly given to you. It is not explicitly told to you, but you have to extract it out of the situations. Now, here, how do we draft it? First of all, the risk. Copy paste the areas from this point area till this area, where you are basically identifying that we have 21 outlets, and out of them, we have only visited 2 of them. Okay. So in this situation, what is happening is that your 21 sites are not being checked. Now, explain why is it a risk. Now, if this is a risk because the particular non-current assets are not being physically verified, we are only being, what we can say, we are only being lazy, or we are only verifying documents, or we are only reading documents. Documents not verified to physical checks. The particular documents not verified through physical checks. That means basically the physical assets are not verified. This is a very high risk. This is a very high risk of assets being misappropriated. Like I'm saying that I have a Mercedes car, but in actually, if you have not seen the Mercedes car, how do you basically make sure that it is there? So if there are no checks, that means basically there's a high chance of theft and misappropriation of assets. So this is one of the biggest risk here. Further, non-current assets in accordance with IAS 36 is basically valued at its carrying value and the fair market value. Obviously, we are comparing the carrying value with the fair market value, or the disposal value, whatever it is. Now, according to IAS 36 impairment, we have to basically make sure that the asset is kept at its updated values, right? So if the value of the non-current asset in physical form is lowered, should we not adjust our non-current assets? We should have. This should be an automated system. The physical verification is not just for whether it is there or not. In what condition is it there? That is also to be checked here. So there is another risk that my asset impaired but not recorded. This will basically result in a position where the particular non-current asset might be overstated in the financial statements. So we, as a person, if we look at this situation, if the asset has gone obsolete, we should have reduced the value. If we are not reducing the value, obviously it is resulting in a loss in a position where the assets are overstated and our financial statements are presenting a misstated position. So this can be a risk as well here. Okay. Now, moving towards the recommendations. Now, my goal is to do what? There are 2 goals here. Obviously, 2 risks, 2 goals. Number 1, verify that the particular documents that are present are basically in line with the physical position. The assets are physically verified with the documents that they're complete. Now, if I am just referring to the situation right in the first situation, documents not verified, there are 2 sides of it. One is whether the non-current assets are present or not, or number 2, if there are non-current assets and they're not recorded in the documents, what will happen then? That means basically our non-current assets can be understated here as well. So you see that a small area can result in 3 types of risk here. Number 1, recorded in documents, not in physically present. Number 2, physically present but not recorded in documents, completion issue. Number 3, the option is the valuation of the non-current asset is at risk as well. So substantive procedures also get aligned if you are basically thinking in the right way. So for these risks, what should I do? Number 1, I should have a physical verification of non-current assets and compare them with documents for completion and physical existence. Further, I should have a system during the areas, during the visit, during the physical counts, that I should basically investigate the full length of the usage of non-current asset, the positioning of non-current asset, and the condition of non-current asset to identify what is the value of non-current asset in the current days. So my physical inspection should verify documents physically, checking the documents, are they accurate, are they complete, checking non-current asset, is it existent, and checking the condition of non-current asset, stating whether the non-current asset is in the correct state, nature, and as of the right value or not. Should it be written off or not? Should there be impairment recorded or not? We should basically be doing that as well. Now, let's just write it for a small area. So the recommendation should be physical verifications and physical inspections of non-current asset to be done. Now, why are we doing it? Impact, if we are trying to identify why are we doing it. Now, if I'm giving you a recommendation, I should tell you that why am I doing it, right? So physical to obtain the correct position where my basically objective is being fulfilled. So my objective is being fulfilled. What is the objective? I have to tell that as well. So that physical verification and physical inspection of non-current asset to be done to ensure updated figures are present. Now my test of control should be what? Now, if there is a particular physical inspection, if there is a physical inspection, there will be a physical inspection report as well, right? If there will be a physical inspection report, that means basically the physical inspection report will give us a position that particularly this physical inspection report will give us the health condition of the non-current asset, the physical existence of non-current asset, right? So in this position, we have to make sure now what can be the things. I will basically verify the reports. I will take a sample of the inspection reports and check the dates whether they're being done regularly or not. I will check a signature of a senior official, the basically internal audit department head, that whether they have personally supervised the particular systems or they are basically not present there. Okay. So all of these activities are to be done and obsolete and identified inventory are to be outlaid responsibly. Okay. Now moving forward to the next step. The second part. During the year, the financial controller changed the company's capitalization accounting. In accordance with the revised policy, only items of capital assets, nature exceeding 20,000 are accounted as additions to non-current asset register. Now, please read this case. This is the area where everyone have misunderstood the passage. Mainly what they are asking you is, they're telling you is that a non-current asset or any capital expenditure, they're saying any capital expenditure is classified as capital if it is above 20,000. Below that, it is counted as or understood as a revenue expenditure. Okay. Now, in the statement of financial position, we are recording anything that is above 20,000, not below that. Any non-current asset purchased below 20,000 were written off in the statement of profit and loss. Now, many people think that this statement is entirely wrong. It is not wrong. It is not wrong. Companies have thresholds. Like for materiality, we have thresholds. Company have thresholds for capital and revenue expenditure as well. Okay. Companies set thresholds according to which they classify whether we should basically identify this as a revenue expenditure or a capital expenditure. This policy is acceptable. This policy is not against the financial reporting standards. Please make sure of that. Write it down with yourself that this is not against the company's policies or IFRS or IS. This is a standard policy that is followed by multiple companies. Now, practically, they set a threshold according to which they basically decide whether it is a capital expenditure or a revenue expenditure. Okay. Now, the main problem here is the amount that is set. The amount that is set, that is 20,000, is way too high. Is way too high to be classified as a capital expenditure. And think logically, if in a company you're saying we are having 20,000 or more spent, then only it is a capital expenditure. And remember, this is dollars. It is a significant value. So the threshold should be set at a lower value, but it should be set in a way this policy is correct, but the threshold is wrong. So in this position, the particular risk is due to the threshold being significantly high, there is a higher room of people committing fraud. There are people like employees who can record a purchase less than 20,000, expense it out within the year, and say it was an asset that we utilized. There can be higher risk of misappropriation of funds or fraud as well. So the higher risk of fraud is to be done here. The main problem that we are going to face is fraud. Okay. So the risk is high threshold. The risk is high threshold. So if the threshold is high, what will happen? The problem will be that over the time, over some multiple years, the amount that is expensed will be significantly higher. And it would result in a loss for the company as their non-current assets are going to be understated in this way, right? Now, if I'm making repairs of my company on monthly basis of 10, 12,000, in a year it becomes 120,000. So in a year, if I'm having 10,000 each month being done, and I am basically not recording them as a capital expenditure, they are not going to be basically classified as non-current asset. They are expensed out. So I am losing my non-current assets value by 120,000. That is a significant amount. Number one. Number two, the nature of the transaction is to be looked upon as well. Now, the three conditions of capitalizing a non-current asset or values should be basically, is it increasing the useful life of non-current asset? Is it increasing the value of non-current asset? Or is it increasing the performance of capacity of non-current asset? So both the measures are to be taken into account. You have to set a threshold. Other than the threshold, you have to basically make sure that the three policies are also being applied simultaneously there. So high threshold means higher expenses, lower non-current assets. This will result in a higher opportunities of fraud as well. So what should be my basic recommendation here? My recommendation here should be that first of all, the policy should be changed where the particular board members should decide the particular level of whether to capitalize a transaction or expense it out. And the amount should be substantially dropped, not dropped slightly, substantially dropped in a way that it should not exceed a particular threshold accumulated in a year. Let's say, I'm just giving an example. In the year we can set that if in a year we are having 15,000 worth of expenses altogether, it could be classified as expense. Okay. Now the transactions are to be individually looked upon and looked upon as a whole as well. That if a particular year, that means basically for 12 months, we can say approximately per month we are allowing an expenditure of $1,250. $1,250. Basically, we are saying each month, if $1,250 are to be spent by a particular company, we can say that yes, this can be written off as an expense. But if $1,250 is exceeded, then we have to check that whether it should be basically reported as a capital expenditure or it does not fulfill the capitalization criteria. So first of all, board should discuss this threshold and the criteria for this policy to be set. Second, the threshold should be set way below the limits that are currently set and should be accumulated for the complete year. Now, this is the objective. This is the basic recommendation that we are having. Now, how do I make sure that the particular board has discussed this meeting? Minutes of the meeting. I will review minutes of the meeting and see what are the changes in the accounting policies that they have incorporated and discussed upon. Further, I will do one thing. I'll take up a sample of any expenditure or any capital purchases and see what amount is it being recorded upon. Is it breaching the threshold of 1,000 or 1,250? The amount that we have said, it is more than 1,250. Is it capitalized or expensed out? So my threshold testing will be done simultaneously here. This will result in a way that the amount that should be capitalized is capitalized, my assets are reported accurately, and my expenses are recorded accurately as well. So I believe that this particular area is slightly tricky. This point is slightly tricky, and people might think that this is a financial statement or reporting issue that we are having. It's not a reporting issue, it's a policy issue that we are basically facing. Now, bank in cash. Let's move forward and read this. On a weekly basis, a bank payment list is generated for supplier payments. Okay. The finance director reviews the total amount of the bank payments list and authorizes it. The finance director then passes it to the financial controller who processes the payment. Now, what is happening here? The finance director reviews the total amount of payments to be made. But is he basically looking at the breakdown of these payments to be made? Can there be a risk here that the particular amounts in the breakdown are inaccurate? Yes, obviously. He is not checking any supporting documents. He is not taking on or identifying the breakup of these lists of individual suppliers. He's just seeing the totals and he's passing it along. This is a risk that is significant. The risk is that particularly, first copy this passage. Now the risk can be identified here. First of all, number one, risk of fictitious supplier. Risk of fictitious suppliers. Fictitious suppliers can be placed in the breakup with multiple small amounts so that they are not caught. Okay. This will result in what? Fraudulent opportunity. Now my risk is, I'll break it down. First of all, I'll copy paste that the finance director is just looking at totals, not looking at the breakdowns of the particular supplier payments. This would result in a position, where the supporting documents are not checked and the suppliers that are being paid are not verified, resulting in a chance of fictitious payment to the suppliers and a fraudulent opportunity created for the employees themselves as well. Now, this is the risk I have identified. Now, my mitigation strategy, my recommendation, what should be my recommendation? My recommendation should be that the finance director should review the breakup of all the particular suppliers and verify them with the supporting documentations, read the supporting documentations. After supporting documentations are checked for duplications, errors, and unfamiliar parties, and everything to be verified, he should authorize the payments and move it forward to the financial control. So documents to be compared with the breakup of suppliers, and with the breakup suppliers, particularly we can have an additional area where we can see for duplications, fictitious people, suppliers who are unfamiliar, who are not authorized. Obviously, so if someone is a supplier, he is coming from an authorized list. So if he is not in the authorized list, we can call them out and investigate them, whether they are real or fictitious. So I should basically give them this particular guideline where once it is all verified, all cleared up, all evidences are sufficient and appropriate, we can give a authorization. Okay. Now this is the recommendation of the control. Now, what should be test of control? I am telling the finance director to check the particular documents, and review the suppliers. So if the finance director is agreeing them, he will be basically having some kind of documentation, some kind of authorizations done. If a supplier is being verified, the supplier payment list will have supporting documents attached with it and the signature of the particular director also available on it. So I will check the initials of the director and observe the process of particularly having the reconciliation or authorization done by the finance director. I could also sit with the director and communicate or basically ask the director to basically walk through the process of approving the particular payment method or payment approval of the suppliers. This can be also a particular process that I can conduct. Now, moving forward to the next paragraph. Let's see what's in there. Delhi company incurs a lot of petty cash expenditure and the finance department maintains a petty cash float of 500. That means basically they're keeping 500 rupees at all times for petty cash. Now, it is used for making any sundry purchases by the particular company. When staff wish to purchase sundry items, the required sum of cash is given to the staff members who sign for it. The staff member is required to return any excess money to the finance department, but there is currently no requirement for receipts to be provided. Okay, what are they telling you? They're basically telling you that you are purchasing something, you're taking money from me, but you are not asked for a receipt. So a risk is calling out loud in front of you guys that if there is no requirement of receipt, that means basically there is a very high opportunity that people can create fraudulent transactions. They might have expenses, they might purchase some private stuff in the name of sundry expenses and overcharge the company itself. So no business related transaction. What is the purpose of a petty cash system? To basically have transactions in a way that they're authorized and are for business purposes only. Now we are not asking for a receipt, so there are two problems here. Number one, overstatement of expense. Number two, private or not private would not be the exact word. Personal expense covered in the name of sundry expenses. This is the risk. Now, what will happen here? What is the impact? Impact is the business might lose money, or business will lose money, obviously, where the particular employees are utilizing the money or having utilization of the particular opportunity that is stated. Misappropriation of cash can be done here as well. This will be the impact of the business. Now, recommendations. What would be the goal of my petty cash now? My goal of petty cash is to basically give money to employees in exchange of the receipts that they're providing. Basically, the process works on reimbursement, not advance payments. If a person is taking advance payment, the petty cash system says if someone is taking advance payments, first a document should be created in the name of the employee for IOU. The document should be created here. This is the amount that is taken in advance by the employee. So name, amount, and sign of the party is to be required. The IOU document is to be created first. And when the particular employee comes to the petty cash cashier or petty cash voucher explainer or whatever it is, they have to submit the receipt and the residual value of the amount left over, whatever the transaction is happening after the amount, whatever the amount is left over, they have to return it back. So the amount returned back should be equal to the amount borrowed. Amount returned plus invoice should be equal to the amount that is borrowed. So in this situation, if the amount doesn't add up, this should be deducted from the employee's salaries. This is the correct process of having a petty cash system set up. But because we don't have the invoices system here, obviously people are not going to pay us back. Why would they pay us back? So setting up a system where the particular advance payments are basically authorized or paid by the senior official and an IOU document should be created on the basis of which the salary slips should be adjusted accordingly. Further, if the receipt is missing, that means basically this amount should be deducted from the employee's salaries so that we can basically have a reconciliation done, we can have a reimbursement done on adequate grounds. So this is a system that we should basically educate. This should be a recommendation that the system, the petty cash book ledger accountant or petty cash system handlers should maintain the amount or maintain the account of amount borrowed by the IOU documents in the name of the employees with the details of the purchases that it is intended to be used for. Then the invoices should be submitted. And if the invoice is not submitted or the excess amount is not paid back, it should be deducted from the employee's salaries with a reasonable justification of IOU document attached to it and authorized by the senior official, obviously. And if the amount is returned back, the amount should be equal to this particular combination. This is a recommendation I should have. Now, if this recommendation is given, what should we basically be doing in the situation? What should we be doing in the situation of testing the control? Whether the control is being implemented or not. I will pick up a sample of IOU documents. I will pick up a sample of IOU documents and check the documents are present or not. Then I will follow through the IOU documents and track the transaction towards the particular receipt or the amount reversed back or excess amount received back by the accountant. If the amount is lagging behind, I'll check for the employee's salary statement and see whether the amount in the salary statement has been deducted or not. So test will basically make sure that my system is working effectively and efficiently in a way that all the transactions are reconciled and are basically approved by the systems. Plus, we can have one more system approved here that if someone wants to purchase something, someone wants to borrow something, they should seek approval of the department heads. And if the department head approves it, then the approval document should also be verified whether the purchase was for business use or for personal use as well. So with this, we can basically have a cross verification of the payroll as well. Now working towards the last area. The cashier reconciles the main current account on a monthly basis as this contains the highest levels of activity and reconciles the remaining three bank accounts every 3 months. The reconciliation are reviewed by finance director who evidence this review. Now, the problem here is that the reconciliation should be done every month, not quarterly, not once in a while, every month. If they are not doing it every month, that means basically this is the problem. This is the problem. All the four accounts should basically be reconciled each month, and the director should basically approve or basically evidence the review to be done for all the accounts. So the risk is in 3 months' time, there can be a fraudulent transaction. Now, many of you have seen the stock exchanges, many of you have basically seen the open world, where people tend to use the company funds for some personal expenses and reimburse the company accounts or basically top it up after some time. Mainly directors can do that. So if the amount is not reconciled for 3 months, there is a higher risk of error and fraud in the particular company. So if they're not recognized in timely basis each month, each week, we can say each week, we can say that if it is not done each week or each month, basically it would result in a higher error or higher fraud chance for the company. So my recommendation will be that all bank accounts to be reconciled each month and each account to be basically approved and checked by the finance director and reviewed and evidence for that as well. Any kind of anomalies or any kind of reconciliation errors should be verified, should be written down, and should be investigated upon. Now my review should be, my test of control should be that I will review a sample of the particular bank reconciliation and check whether there is an initial of the reconciliation of the finance director on the reconciliation document as well, and any kind of conversation between the particular employee and the finance director for the investigative purposes. So this is how we can basically draft the particular recommendation here for this particular part. So a 15-marker question that basically applies majority of the areas, majority of the understandings here is in front of you. Now I'm pausing the recording for anyone has any questions, you can ask me. So we'll continue that. So the chat box is open. Please write down any queries that you have. Okay, now. Next question that we have is based on Swift company. It is available in the Kaplan kit. Now, the requirements for this question, direct controls and test of controls. Now, 14-marker question, that means basically we can divide it 7 plus 7. Okay, 7 plus 7. Now, in 7, the first direct control area, the first part, as I told you earlier on as well, you have to tell the particular examiner what is a control and why do you consider it to be a good control or a direct control. And the test of control, obviously, we have practiced it right now. So let's just read the passage and identify them simultaneously. Now let's go for the particular questions. Swift company employees, factory staff who are required to work a standard shift of 8 hours per day. No staff members are required to work overtime. That's a good thing. All staff members are paid monthly by the bank transfers. The company has a human resource department which is responsible for setting up all new joiners and a payroll department which processes the wages and salaries. Now, first of all, there is a common problem in companies where segregation of duties is not present. So here we can clearly see that there is a segregation of duties present between the particular HR department and the payroll department. Number one, direct control. HR and payroll are separate. Now, why is it a direct control? Why is it a good control? Now, HR is setting up the particular new employees and the payroll is processing the payments. They're kept separate. Now, why is it a good thing? It is a good thing because the particular risk, what is the risk it is being mitigated from? What is the risk that is coming in and is being mitigated here? You have, the main focus should be on that part. The risk that is being mitigated here is basically that the particular HR department can create fictitious employees and pay them a salary, or basically pay the salary to some relative who is not working in the organization. Fictitious employees basically mean that you're creating a person's account who is not in the company and paying them salaries. And mostly it is your own account that has been created by a separate name. So if HR and payroll are not segregated, there will be a risk. There will be a risk that the particular fictitious employees or ghost employees can be created up and can be paid for the particular hours or work they have not done. So when you're writing a direct control, how is it a direct control? Explain what risk is it mitigating. Explain what risk is it mitigating from this particular control. So having a segregation between payroll and HR reduces the risk of having fictitious or ghost employees being set it up, and overstatement of payroll cost can be reduced here, can be controlled. That is the simple control that we have. So in terms of its explanation, reduced risk of ghost employees. And what would be the impact of having ghost employees? Overstatement or overpayment, not statement basically, overpayment of payroll. Now, when they're separate, obviously, it is a good thing that we are going to have a cross-checking part. The payroll will check the work of the HR department. The HR will check the work of the payroll department. So there is a cross-checking process being done here. Now, the main problem comes in how to test this control, whether it is mitigating this risk or not. Now, first of all, I am telling you, or the examiner is telling you that the HR and the payroll is different. So, can we check the particular job descriptions of the particular members of the departments? I will go to the HR department and check their job description and check whether any kind of relation with the payroll is there or not. I will go to a payroll department and check whether any kind of relation is there with the HR department or not. I can discuss with the members as well that whether the particular employees have anything to do with setting up of new employees. I will go to the payroll department, ask them that do you set up employees? If they say yes, that means this particular control is not effectively being implemented. If I go to the HR department and I ask that did you pay the employees? If they say yes, that means basically they're not applying the particular systems. Further, I will see where did the document initiate from for the new joiners. I can also check or take a sample of the document and check whether the departments, whether the particular new joiners documents is created by the HR department or the payroll department to verify that this control is being applied simultaneously or accurately or not. So my test will be check job description. I'm writing it by JD. Plus, I can discuss with employees regarding their tasks on daily basis. Plus, I can go for checking the initiation point of documents. Okay, I can check the initiation points of documents so that I know that whether the particular amount is being generated from the HR department or the payroll department or whatever it is. Okay, now moving to the next paragraph. Let's see what does it say. When a new employee joins the company, the HR completes a joiners form, which includes a unique payroll number for the employee. Now, this is a direct control. if an employee has been given a unique employee number, obviously identification is easy for us. There is a reduced risk of fictitious employees. There is a reduced risk of mixing up employees between two people. Let's say there are multiple people working in an organization with having similar names or same names in many companies. So in this situation, we are having a direct control of unique employee number. The unique employee number helps us mitigate the risk. Which risk? Risk is mitigated, that is being mitigated is fictitious employees, doubling of employees, or wrong employee identification. Okay, so there are three risks that we can have. If we are having a unique code, obviously the HR or any other party can go and track that person down single very easily. That if I know that my number is number 2, they can type in my number, access my record, call me up, do whatever you want. If there are two people of a similar name, then obviously there can be a chance of mixing up. So it will basically reduce the risk of mixing up, doubling up, or having fictitious employees created in the particular systems. Okay. Now, if I want to check this control, I will do what? I will try to now the control test here. What is my objective here? To identify whether there is a particular unique employee code number or not. So what can I do? I can basically refer a sample of new joiner form and visit the new joiner for employee code verifications. I can go and check up with a particular employee that whether he has a unique code or not, or is it just on written basis. So this can be done. I can basically attempt to enter the unique code into the system and see whether the system has a unique code or not. Or I can try to basically add up a number that I know is not in the system, basically test data to see whether the particular system rejects my approach or accepts my approach. If it is accepting my approach, that means basically the data system is weaker. We are having some manipulations here. If it does not accept me, it rejects it. That means basically that we have a particular situation working up correctly. Plus, I can do one more thing. I can go from the payroll department and try to add up an employee or set up an employee and give a unique code to the employee. If it rejects my application, that means basically it is working accurately because the HR department should be the people who are adding the new employees, not the payroll department. So I can go for that particular approach as well. So there are multiple tests that we can do basically to make sure that the control is working effectively or efficiently. Now, moving on. The joiner's form is sent to the particular payroll department so that the new employee can set up the payment. The unique employee number must be entered into payroll system before the employee can be added to payroll. On a monthly basis, an exception report related to changes to the payroll standing data is produced and reviewed by the payroll manager who evidences this review. This is a very good control. Now, in the previous question, we basically studied, right? We have looked upon the area that if we are not evidencing, or we are not checking the particular exception reports, it is a weak control. Now they are checking this particular report. So the risk it is mitigating is risk of errors going. Let me change the color. Unnoticed. Risk of errors going unnoticed or risk of situations where fictitious employees can be reduced. The risk is reduced here. The risk is substantially reduced here because the senior is reviewing it. When the senior has a time, he is checking the valid and invalid transaction. He knows that there is basically no errors in the systems. So exception reports help us in a way that they basically identify or basically make the errors or changes in a bolder side. So anyone who is responsible enough to check them will identify them and validate them on a timely basis. Now, if I want to basically check whether the system is there, whether the control that they're saying is there or not, I will basically just take up a sample of monthly exception reports and check whether there is any evidence, any signature, any stamp by the senior payroll manager, whether he has checked the particular systems or not. If he has checked it, there will be a stamp, there will be a signature. If he has not, obviously, there will be nothing there. So I will check it for it and basically see whether it is present or not. Now, moving forward to the next paragraph. Employee hours worked and their hourly wages rate are preset into the system, which automatically calculates the gross net payment along with the relevant deductions and generates pay slips. The payroll supervisor selects a sample of pay slips and reperforms the gross or net calculations and investigates any discrepancies. The sampled pay slips are then signed evidences. Again, a good control. Again, a good control, a direct control. Basically doing what? Recalculating gross to net. Basically, how does it help us? It helps us in a way that basically we are reducing or basically mitigating the risk of having errors in the system, errors in terms of inputting of data, any kind of fraudulent activities, and the risk of having under or overpayments of wages being there. So we are mitigating the risk of this particular situation. So again and again, I'm repeating, if you want to explain a direct control, explain how does it mitigate a risk and what risk is being mitigated by it. So it will give the examiner an indication that yes, you know that this is a control, this is helping in doing what. So the direct control should basically mitigate a risk directly. You should prominently be able to see that yes, a risk has been mitigated. So if you're explaining that to the examiner, obviously he is getting a side that yes, you know what you're doing. You're just not picking up things that yes, it is a control. Why is it a control? Why is it a good control? You're stating that as well. So this will definitely gain you some marks. Now, moving forward to the basically test of control, the test will be basically we can review the monthly pay slip, the sample that is being checked or reviewed or signatured. We should basically go and check for a sample and see whether these signatures are present there or not. And we can basically do one thing. If there are any anomalies or any kind of problems, they are saying we investigate them. So if there are any discrepancies, how did the manager discuss it and rectify the rectification calculation should be there. So if it is there, we will basically take a sample of the payroll reports and check whether the errors were rectified by the payroll supervisor and how were they rectified. We can check the systems through that process as well. Okay, moving forward to next step, next paragraph, purchases. The company has a purchasing department based at its head office. When the raw materials are required, the production supervisor submits a requisition form to the purchasing department. A multi-part purchase order is generated and purchasing manager authorizes all orders up to 5,000. Orders over 5,000 are authorized by purchasing director. Now, do you see some kind of segregation here? Yes, segregation of duties is done here. Authorization of purchase orders are done by multiple level of people. Now, why is it done? Practically speaking, if you look at the situation, a person having a chance of authorizing a very high value as compared to his salary has a vision that sees an opportunity for a fraud. If one person is earning 5,000 per month and he gets the approval of 1 million per month, obviously he sees a chance of any kind of fraud there because he has less to lose and more to earn. On the other hand, if a person gets an equal position or a position where his salary and his approval levels are close to each other, he will not risk his salary for something slightly above his payroll. So the multi-part or authorization segregations are basically the direct control here. Segregation of authorization of purchases is the control here. This reduces the risk of having a particular having a particular situation where the purchases expenses are genuine or personal expenses are to be made. This reduces the risk of fraud and high values to be done by higher people so that they can check whether the business transactions are for genuine business purposes only. Now, how do I check basically that these transactions are done? I will try to enter a particular transaction above 5,000 from the manager's purchasing system and see whether the system rejects it or not. If the system rejects it, then obviously it means that basically the system is designed in a way that a manager cannot approve a transaction more than 5,000. That means my system is working accurately. Plus, I can select a sample of purchase orders and see whose signature are present according to the purchase limit that is set there. If it is above 5,000, it should be a director signature. Is it there? Yes, my system is working accurately. If it is below 5,000, is the manager approving it? Yes, that means basically the system is working accurately here as well. So I can basically perform these activities to ensure that my internal control is working adequate. Now moving forward. Next paragraph. The warehouse team processes goods received from supplier. They agree the goods received to purchase order and check the quantity and the quality of the goods. On completion of these checks, the goods received note are signed and is produced. One copy of the GRN is signed and filed with the warehouse, and another copy of GRN is sent to the finance department. Now, is this a good activity? Yes. That first we are basically checking the goods. We are confirming the goods with the tripart orders, the GRN, the invoice, and the purchase order. All three things are basically verified. The purchase order is verified with the quantity so that we know that this is the thing that we have ordered. These are the features we have ordered. These are the quantities that we have ordered. This should be the quality that we have ordered. Once you have verified that, you have created a GRN. This helps in what? This basically helps us in having discrepancies or chances of non-recognitions of liabilities. Discrepancies, what do you mean by that? Less quantity coming in, inferior quality product coming in. So these are discrepancies that can be created if we are not checking the particular goods before signing the GRN. So GRN is created and proceeded and provided to the finance department. This indicates us towards the area where the particular system is working efficiently and the payments are going to be made adequately. The liabilities are going to be recognized adequately on time, and the goods are going to be on the quality, on the quantity as we requested them to be. So we are receiving after them. Now, what is the particular internal control in the system? The control testing can be done in this way that basically in the particular, what we can say in the system, if we are basically having a GRN, we can go and check the GRN and take a sample of GRN and go and physically ask the warehouse department to give us evidence that what is the system of having this GRN created. We can basically go, the GRN has a signature, compare the GRN, take a sample of the GRN and compare the signatures, whether it is done by the department or the warehouse or not. Observe the process of inventory count and GRN being created so that we can know that this system is being implemented in the systems or not, right? So we can have these checks done by multiple ways. Now moving forward to the next paragraph. A paper ledger clerk logs the purchase invoices in batches of 20. In the detailed purchase listing utilizing the controls total. A batch control sheet is completed for each set of 20 invoices, and clerk signs the evidence that the systems have been checked adequately. Now, what are they doing? They basically are having a system where 20 invoices are done, are basically added up in a batch, and they are updated into the systems. Okay. The batch control sheet is completed after 20, and the clerk signs the evidence and checks the undertaken invoice. Now, basically, what they're doing is the batch inputs are used in. Once the particular batches are being inputted, the clerk is using the controls to basically verify the totals of the invoices input and the manual invoices they have. After 20 invoices, the particular system breaks up. So if 20 invoices are inputted, the employee should see that he has 20 invoices in his hand as well. And the total of the 20 invoices should be checked manually as well. Chances are that there will be any discrepancies if there is a wrong input. This system reduces the chance of having errors in inputting. The most common error, that is input errors, will be mitigated here. Why? Because the particular systems are basically working in a way that they're telling the total of invoices input and the total amount of invoices as well. So the employee can manually check them as well and then sign documents that they are adequately or updatedly or accurately entered into the system. So this is a very good system that mitigates the risk of input errors. There are completeness and accuracy. Both assertions are being satisfied with this particular internal control. So this is a good system that we have. Now, what should I do basically to make sure that the particular systems are working effectively? I can review a file of reconciliation and see whether the particular system is being done adequately by the employee. I can see the initials of the responsible official. I can reperform the sample input systems through my basic data and see whether discrepancies are investigated or highlighted in this way. I can try to enter 20 invoices or check for 19 invoices and stop and see whether the system highlights it or not. So this is the way we can basically work upon this particular area as well. Now, moving forward to the last paragraph, supplier statement reconciliations are performed on monthly basis. All differences are fully investigated and the financial control reviews the reconciliation. Invoices are paid in accordance with supplier credit terms. The finance director authorizes the bank transfer payment list for suppliers having agreed the amount to be paid. So supporting documentations having reviewed the list of duplicate payments as well. Now look, there are two things happening here. Number one, what we are having here is we are basically having the supplier statement reconcile. Supplier statement reconcile basically is going to basically do what? It is basically going to help us mitigate the risk. Mitigate the risk of what? Having errors in the system, having tables not recorded, or tables not having the rectifications done what are required to be done. Like there can be understatement, overstatement, or any irregular activities in the particular payments. So these are rectified here as well. So supplier reconciliation mitigates the risk of error and discrepancies. Discrepancies can be any kind of disputes and any delays in the payments as per that should not be there. Basically, payments can be delayed if disputes are there. So we can basically have this system identified here. So tables are updated on time in invoices. They are correct and they are complete in nature. Okay. So how do I basically test this control? I can review the reconciliation statement. I can review the reconciliation statement, check whether the particular official has reviewed them and signed them. I can reperform the reconciliation to see whether the particular system has any kind of flaws in it, whether the reconciliation done is not done accurately, if there are discrepancies, investigated discrepancies. And the last thing that the finance director is basically authorizing the bank transfer, not just the list, but the supporting documents are also verified, checked and reviewed by him for duplication and errors and fictitious employees. So this is mitigating the risk of number one, fictitious payments or suppliers, duplicate payments, irregular amounts. These are all the risks that are being mitigated by this particular activity done by the finance director. So once all of these things are done, the chances of having payables misstated or wrong payments to be paid to the wrong people, we are mitigating this risk by this control being implemented. So what can be the control here? The control can be that if the list is authorized, we can check whether the evidence of authorization is present, and then we can inquire the accounting staff that whether the supporting documents are in line with the finance director. Is the finance director requesting you for the supporting documents for particular employees or for particular suppliers or not? If he is not, that means basically this is a fictitious system. If he is, that means basically it is proving that my internal control is effective in the planning and application phase as well. So I believe that we have covered the complete areas, the types of questions for internal control specifically. And I believe that everyone has understood the concepts. Now I'll be referring to the chat box for any questions you have regarding this area. If no questions are there, then we'll end the session for today, as our main objective was to cover the types of questions coming in internal controls. Now in this crash course, in this 5-day session, we'll be covering each of the specific areas such as substantive procedures, internal controls, test of controls, audit risk, your ethics, audit report. All of the areas are going to be covered. and the types of questions coming in are going to be covered. So please stay tuned and attend the sessions. These are live free sessions for you guys, but the recorded will be in paid form. So anyone has any questions, you can ask me in the chat box, and then we'll sign off for the session for today.